morning, everybody. Today is December 24th, 2019. So Merry Christmas, Happy Hanukkah, and soon, Happy New Year 2020. Today I wanted to talk to you about the exchange-traded funds, and especially about the app that I developed. And this app was just updated yesterday with some new design and very helpful interface. The app covers 2,200 ETFs, issues buy, sell, hold rating for every ETF, and updates it daily. The app could be found via the website etf.com. The site will immediately take you to the Apple App Store, where you could download, install, and run this app on your iPhone, iPad, and Apple TV. We are starting new year in a few days, so investing into stocks is a great idea because we've been going up for a long time, and the economy is very strong, the job market is very strong, and there's basically all indicators that we will be going up in prices on the stock market. If you are a novice investor, I wouldn't recommend you buying individual stocks because the risks are too great and the research is very detailed. So instead, I would advise you to invest into a basket of stocks, and such baskets are being offered by exchange-traded funds. The difference between an exchange-traded fund and a mutual fund is that exchange-traded fund has a very firm fixed formula that basically says that we will be investing 10% of the money into Microsoft, 10% into Google, 20% in Oracle, 20% in Procter & Gamble, and so on and so forth. The manager cannot just all of a sudden change the allocation of your money and dump 100% of your money into some unknown stock or some unexpected stock. If they have to change the percentages, they actually need to ask a permission from SEC, file a lot of paperwork, and alert investors that the formula will be changing. But this happens very rarely, so investors could feel safe that their money would be allocated just like it said in the prospectus of ETF, based on a very firm fixed formula. So another thing about ETFs is that with right now a lot of brokerages don't charge you for trading ETFs or stocks, and basically the cost of your investment is zero versus mutual funds, where the manager will charge you 1, 2, 3, 4, 5%, sometimes upfront, meaning that you're putting $100 into the mutual fund, but only 95 are being invested because 5 is already taken by the manager. So now you have to make 5% profit just to break even. With exchange-traded funds, obviously the transaction is zero, and all your money goes to the exchange-traded funds right away. So the other thing about exchange-traded funds is that they're being traded during the day just like stocks. So they're very liquid, and you could get out or get into them at any time during the trading day. Another great thing about exchange-traded funds is that you could actually buy options on ETFs, meaning that if you bought a mutual fund, if you bought an exchange-traded fund, and suddenly you are afraid or you worry that it might collapse, you could actually buy a put option for 3, 4, 5, 10 months away, which will guarantee you that you would be able to sell your ETF at a fixed price, and no matter what happens with ETF itself. So this will give you great protection and would limit your losses. So download this app for ETF.com, and thank you for your time, and good luck trading, and happy holidays again. Bye bye now.